users of those financial statements. And therefore it means that just besides verifiability, then there must be information that is understood by the users of those financial statements.
All right, so you've talked about the cost of disclosure vis-a-vis information overload. What do you mean by this? Do you think that sometimes maybe corporate companies are giving more information than they should be giving, or you think they're giving less information, and so disclosure, not disclosing certain information about the company, only results in shareholders getting to know at the end of it all that, by the way, the company was not doing as well as it should have been doing? What should we read out of cost of disclosure vis-a-vis information overload?
More or less what I'm looking at here is being able to get significant facts about an organization or a company that will inform the users. And therefore that creates a balance in how to be able to look at that particular information. And what you realize that when you're doing financial information disclosures, there are three elements in it. And there's going to be issues of judgment, issues of estimates that are going to be brought in. A company per se, we'll always say, is a live institution because transactions do not stop. There'll be events even after you report for that particular financial year, because we are reporting at a given time, and those disclosures will be given at a given time. And that is where, when I'm talking about the cost, it means we are looking at a particular given time, because this company is continuing to operate, and therefore it means every other time there is going to be information that is going to affect the operations of that particular company. And therefore it's being able to balance between what is it that is going to be reported as per the information at a given time vis-a-vis the continuation of events for that particular company.
All right. Yes. And so you talked about financial information disclosure, and so companies year on year at some point have to give these financial statements and inform whoever is concerned that this is the state of affairs at this company. But there are a number of companies that one would actually say at some point they probably kind of cushioned this information, especially at a time when the company was not doing too well, and then later on you realize that the company has actually been making losses, and now these losses are being poured out to its shareholders at a time when they do not even expect it. And case in point will be a company like Kenya Airways, which is the national carrier, that has made, I think, the biggest loss any corporate company could ever have made in the history of the country. What does this mean in terms of financial reporting?
I more or less will not think that companies are withholding information. I look at it, every other time there's going to be complexity in any company as they deal with transactions. And for the case of Kenya Airways, there are a lot of issues that came up with the complexity of the operations, in terms of hedging, in terms of fleet management and leasing of the fleet. And this creates complexity in the way the reporting is done. I'll not more or less say that they withheld information, because if they withheld information, it will not be public information and will not be discussing it. There was disclosure to a level where it is understandable between you and me as the users of financial statements. Maybe what users of financial statements will require more, but I mean, requiring more, we have to create a line between where does management stop in terms of being able to make the decisions of the company, and what you as an investor needs to be able to know for that particular company, for the continued operation of that, for the continued investment as an investor in that particular company.
All right, let's look at a company like Uchumi that recently shut down operations in Uganda and Tanzania, which has led to I think about 900 people losing their jobs collectively. That is 400 in Uganda and 500 in Tanzania. But looking at a company like Uchumi, do you think that if you to evaluate their financial reporting. Would you say that they've also taken some time, or probably they've given its shareholders an overload of information, and so now they're at a point where, okay, there's nothing else to hide, and so we just have to start from scratch and take it back to where it's supposed to be?
Looking at Uchumi, I'll not say that there's information overload. Is information that we knew of the operations of both the subsidiary in Kenya, and how it has struggled from the time it went into a financial crisis, more or less of a financial crisis, up to where it is right now. I'll not say that there has been information that has not been disclosed to the investors. It's only that the business model was trying to be able to turn itself around, and maybe the patience for the investors has not been long enough, or the company business model then needs to have been relooked at to be able to inform how they're able to turn around the particular business. Yes.
And do you think it's still necessary for them to cross-list in countries like Uganda and in Rwanda, knowing what is going on with the company?
I'll say yes.
Yeah.
It's a business. It's going to operate, and in any case, there is no business that has a profit curve from year in, year out. There are situations where the organization or the company will be able to face challenges, and therefore what Umia look at is how do they get out of those challenges to be able to turn itself around and build that profitability, and also be able to give a return to the investors.
All right. And of course the most recent one as well is Imperial Bank, that has been placed under receivership by the Central Bank of Kenya. What do you read out of this?
I may not say much about Imperial Bank. There is much that has not been disclosed, and therefore I look at it in terms of as and when we get the relevant information on Imperial Bank, then we should be able to give and analyze and say what is it that Imperial Bank, what is the problem with Imperial Bank as it is right now, is an issue of the regulator, Central Bank, being able to deal with the banking issues with Imperial Bank.
All right.
Yes.
And you know, for a bank that went through approvals and also have remitted enough to even issue a bond, in the case of financial reporting, maybe one would actually say they missed something that wasn't captured maybe by a number of other you know, organizations, or rather companies like, for instance, IcePac. But what would you say for a company that has even gone through the approvals and they have actually remitted quite enough for them to even issue a bond, but then at the end of the day they are being placed under receivership?
I don't want to dwell much into the issues of Imperial Bank.
Yes.
But looking at it, there was reporting that was done, the information that was given at a particular time, that was audited, and the auditors were able to look at the financials at that particular time. As we look at the organization, there are various facets that we'll need to be able to look at, and for me, I'll want to understand what was the business model for the first before I can be able to respond to this.
Okay,
yes.
so let's talk about the fire awards. Everybody is looking forward to them, but would also like to know what is it about 2015 that we need to keep in mind.
I think for Fire Award, more or less is being able to look at continuous improvement in financial reporting. And what we're looking at is how to be able to year in, year out, improve companies in terms of the disclosures they make on their financial statements. This particular year we are very proud to have the public sector, and in this we mean the ministries, departments, agencies, the county governments, state agencies, and those state corporations participating in the Fire Award for the first time this year. We have a total of 234 entries from there.
That's impressive.
Just to mention is that we also have regional representation from Uganda, Tanzania and Rwanda, who have actually been participating in the Fireword because of the recognition that that is able to assist their companies to improve on the disclosures and financial reporting.
All right, so this year is going to be different. 234 entries that you've received, and well, state agencies, government institutions, that says something that they're actually doing more to disclose information.
I want to commend the government for having been able to take that initiative to be able to get into the Fireword. As you realize that this is going to be the first time when the government is going to be able to have financial statements that have also been consolidated, and therefore we are able to look at the disclosures that have been made by the various ministries, departments and agencies, as well as the state corporations and county governments, being able to help them improve on the financial reporting and disclosures that are going to make. That will have information that will assist the public in being able to understand the information being provided by these entities in government.
All right, well, thank you so much, Edwin Makori. It was an honor having you in studio. Talk to us about a number of issues, including financial reporting in Kenya and across the East African region. He is the Director of Professional Services at ICEPAC. Coming up next is News Hour, so do join me very shortly.